All right, good afternoon, everyone. We've got a special interview lined up for today with Bill Kostarides. Bill runs the international markets and after-hours service at DTI and has been trading for well over 30 years, and it's very unique in the sense that Bill really focuses on the night market for his primary trading, using some of the foreign indices to trade the E-mini S&Ps at night. In addition to the E-minis, Bill also will trade the 30-year bond bit, and so again, we appreciate Bill taking the time to join us. We thought that we would just see what his insights were, some of his thoughts based on everything that happened. We obviously had a wild move in the market today. So, Bill, can you just kind of give us an idea of some of the things that are moving the market? I know that for a long time you've been bringing a lot of Europe's troubles kind of to the forefront and saying that there's more there than meets the eye. So can you share a little bit about that and just some of the things that you're looking for in tonight's market?
Well, thank you, Morgan, and hello, everyone. Last night, to say the least, was interesting. After about 2 p.m. markets open, we started to slowly sell off and never look back. And as I was telling my group being the folks who trade after hours and the service that we have, that you need to watch. It's real simple when you're trying to figure out what's going on, because we all know that what's taking place in Europe is definitely affecting our markets. We can't ignore it. But I've always said, and I believe, that the bond and currency markets, these are very smart traders, very smart investors, and they're the ones to watch. So we've keyed in on the Italian bond yields and have talked about once they get over that 6 and 7, 8, 7% range, then it becomes a real issue as to Italy's ability to service debt. Same with the currency. Watch the euro. So it really is simple. You don't have to worry about whether Papandreou and Berlusconi are or are not, and what they're doing now and what they're not going to do, because it's a work in progress. Just watch the bond and currency markets. The Italian yields now are over 7%. They shot through there dramatically overnight and this morning, and you can see the result it's having on the world banks and world economies. Also, I think another key market that you could look at are the international banks, especially in Europe. For example, Bank Santander in Spain, one of their largest. When that stock gets below $8, which it's very seldom done, you need to understand something's bad wrong. But again, keep your eye on these Italian bond yields, and if you can't follow those, because they are hard to get real-time quotes, just look at the euro and it'll speak volumes to you. Now, the group that I spoke to, I did a webinar on Monday. I talked about this particular bond auction with the ESFS, which it received very little attention, which really surprised me. It was overshadowed by everything going on in Italy and Greece. And this is the fund, as many of you know, that was put together to bail out the banks and the sovereign debt countries in Europe. And they were trying to auction off some $5 to $6 billion and only were able to raise $4 billion. Now, ladies and gentlemen, this is a AAA rated fund. Number one, it's guaranteed by the various countries in the Eurozone. For example, Germany guarantees up to $120 billion alone, and it's all based on capital requirements and per capita of industrial and GDP production. It's a sort of a complicated formula that I'm not even sure I understand right now, but the bottom line is it's AAA rated, it's guaranteed by the various entities in Europe, and they were only able to raise $4 billion. Now, when you have a fund that was just put together, AAA rated, and you know their bond auctions are weak, I think that says a lot. So I brought that up Monday when we had one of our webinars. Said we need to keep our eye on these bond auctions because they've only raised $11 billion so far out of $440 billion that they intend to raise. They've got a long way to go. And if you watch the industrial production numbers in the UK, Germany, we all know Germany's important, but as well the UK, these numbers are contracting month after month. The other night, Germany industrial production contracted 2.7%. We all know Italy is the third largest in Europe in terms of its economy and one of the largest bond markets in the world. So yes, it's going to have an effect because it's not like Greece, Ireland, or Portugal where you send them a little money and it buys them some time. Okay. Also, I think that if you have a portfolio, especially of the multi-internationals that do not most of their business, but 10, 20, 30%, examples are Coke, McDonald's, Philip Morris, GE, Ford, GM, and the list goes on. Now, when I say their business 10, 20, 30% is derived from Europe, I think the best case scenario that comes out of Europe is what I would consider a reasonably deep recession. So these companies are going to get hit from two directions. They're going to see a slowdown in their sales in Europe, plus a higher dollar against the euro, and you can do the math and see that it should have an effect on these kinds of companies. And so if you have these companies in your portfolio, I suggest you take a hard look at them. So those are just some of my brief thoughts on what's going on in Europe and how it's going to affect not only markets around the world, but our markets here in the U.S. So again, good luck with your trading and your investing, and I hope to get to talk to you in the near future.
All right, great. Thanks again, Bill. We appreciate you coming on here for a couple minutes and sharing your thoughts, and we'll definitely have you back very soon.
Thank you, Morgan.